Hello and welcome back to this channel. Today I have one of the best course for beginners to be familiar with Japanese candlestick pattern and formation. This video will demonstrate an easy and effective foundation for beginners to understand the essential characteristics of Japanese candlestick pattern and its formation. The relationship between the body and the wicks are compared, and the key components of the candlestick charts are explained through open, close, and high and low prices of the candles. Different types of single candlesticks are shown and explained thoroughly to prepare beginners to identify the high probability trading setup. Finally, the method of candlestick mat blending is explained to combine two candles together to form the equivalent. Before I continue, I have to clarify some definition used in trading with candlestick. For example, what is candlestick chart? Candlestick chart is a method of reading price charts. There are two types of candlesticks. One is bullish, indicated with green or white color. The second one is bearish, indicated with red or black color. What does bullish candle mean? Bullish candles mean the price close higher than open price for the duration of the candle or time frame. What does bearish candle mean? Bearish candle means the price close lower than open price for the duration of the candle or time frame. What are the essential characteristics of candlesticks? They are the body and the wicks, open and close price of the session, highest and lowest price of the session. What does the body signifies? The body of the candle represents who is in control of the market, the bulls or the bears, the buyers or the sellers. What does the shadow represent? The shadow or the wicks represent the price rejection from the buyer or sellers. And finally, what does session mean? Session refers to the duration of the candle from open price to close price, or simply refers to a time frame. What is bullish and bearish candlestick and how does it form? Let's assume this is a candlestick and the time frame of this candle is D1. It means this candle represents 1 day of trading. So in the morning, the price opened right here. Now, when the price opened right here, now the price may go up or may go down from here, or may go down. So if it goes up, that means the presence of the buyers that are stronger. If it go down, that means that the sellers pushing the price down. If it go up, the color will change to green, that is bullishness. And if it go down, the color changes to red, that is the bearishness. Now let's see what happened, whether the price is going to go up or down. Oh, the sellers, they're pushing the price down. So the sellers, they're very strong and pushing the price down. Now what happened? It got rejected by the buyers. The buyers didn't want the price go down. So the buyers pushed the price up. And what happened? It left a lower shadow. And this is going to be the lowest price for the day. Now the price, is going to go up. Still the buyers, that are very strong. And the price is going to go up more and more and more. And finally, the sellers, they reject the price. They didn't want the price to go up. So they push the price down, and they wanted to push it more, but the stock market closes. So that means that's the close price of the candle. And what happened, it left an upper shadow. That is the price rejection by the sellers. And this is the highest price of the candle for the duration of the candle, or for this session. So this candle represents a bullish candle, or that's a bullish body. Now let's assume this is another candle, and the price opened right here. Now the price may go up, the same thing as the first one, or may go down. If it go up, it means the buyers push the price up. If it go down, the sellers push the price down. So we see what happened. Oh, the buyers are in the market, so the color is green. So it means that the price is going to go up and up. And oh, it got rejected by the sellers. It got rejected. And it left an upper shadow. And this is the highest price for the day. Now the price is still the sellers pushing the price down and down. And again, the price is going down and down, and finally it got rejected by the buyers. The buyers didn't want the price that much going down. So the buyers push it up, and the market closed. So that is the close price of the day, and it left a lower shadow. That's the price rejection from the buyers. And this is the lowest price for the duration of this candle. So this candle, it is a bearish candle, or that is the bearish body. Bullish and bearish candlestick hammer, and how does it form? It is very important to know how the candlestick is formed, especially this hammer and inverted hammer or shooting star. You know the outcome of thousands of pattern and formation. The outcome, if you blend it, the outcome is nothing but hammer or inverted hammer, bearish or bullish. So it is very important to pay attention that how this hammer and inverted hammer is formed, and why there are so much power invested in these two candlesticks. I have a video on candlestick mat blending. I blend almost more than 22 patterns, and the outcome of these 22 patterns is nothing but hammer or inverted hammer. So please pay attention to this slide. Let's assume this is a candlestick, and the time frame of this candlestick is D1, 1 day of trading. In the morning, the market opens here. The price may go up or down. If it go up, the color will change to green. That is the presence of buyers in the market. And if it go down, the color will change to red. That's the presence of sellers in the market. Now, you see that the sellers are in the market and pushing the price down. Now it pushed the price all the way down, and again it got rejected by the buyers. So the buyers are strong in the market that they reject the price, and again it rejected again. So the price, again, the buyers push the price up and up again and more. And also it passed the even open price. And it goes up even more. And finally it got rejected by the small presence of sellers. So you see how much is the power of buyers in this candle. And finally, the market closed in the evening, and That's the end of this candle. So what happened? It left an upper shadow. That is the price rejection from the sellers, a small price rejection. A lower shadow, a huge price rejection from the buyers. And this is, although that is a very small bullish body, but it is a very strong bullish candle. That's why they say, the professional, they say if you see this candle at the bottom of a downtrend, it suggests the trend reversal. Let's see what happens if this one be a bearish candle. Now, let's assume this is a candle and D1 time frame, the market opens in the morning at this place. The price may go up or down. Oh, it went up because of the presence of buyers in the market. And immediately it got rejected by the sellers. And the sellers pushed the price down and down and down. And finally, it got tired. And the buyers again reject the price. Look at that. How strong. The buyers reject the price. So who is the winner? The buyers right now. The buyers has lots of power in this candle. Although this candle, the market closes at this place. And what happened? It left an upper shadow with a very small price rejection from the sellers and a huge price rejection from the buyers. Although this is a small bearish body, but the power of this candle is bullish. So that's the reason they say if you see a hammer at the bottom of a downtrend, it suggests trend reversal. Doesn't matter the color, bearish or bullish. So that is the reason anytime that you see a hammer at the bottom of a downtrend, that is a price rejection. Bullish and bearish inverted hammer, and how does it form? Let's assume this is a candlestick with D1 time frame and the price open in the morning at this place. So the price may go up or down. If it go up, that's the presence of buyers, and if it go down, that's the presence of sellers. So the price go down first, it goes down first, that's the presence of sellers in the market, and it got rejected right away. And the buyers pushed the price up all the way. And then here it got rejected by the sellers. So sellers are strong in the market, that they reject the price all the way down. And finally the market closed here. So it shows that the sellers are very strong in this candle, in this inverted hammer. Although the color is green, the color is bullish. Now it left a huge upper shadow, that is a huge price rejection from the sellers, and a small lower shadow, small price rejection from the buyers. This is the highest price of the day, and this is the lowest price of the day, and that is a bullish body. Now let's assume this is another candle with D1 time frame. The price open in the morning here, and the price go up by the buyers. The buyers push the price up all the way, and unfortunately it got rejected by the sellers. So sellers are very strong, very strong, still pushing the price down. And finally it got rejected by the buyers, a small price rejection. And finally the price closes when the market closes. This is a huge upper shadow, that is a huge price rejection from the sellers, and that's the small lower shadow, small price rejection from the buyers. So although the color of this candle is bearish, but it is a huge bearish power. So if you see this candle at the top of an uptrend, it suggests trend reversal, because they call that bearish shooting star. This bearish shooting star is a bit stronger than bullish shooting star. Now, and this is the highest price of the day, that's the lowest price of the day, and that is bearish body. This is very important. Bullish or bearish hammer at the bottom of a downtrend, it is a strong possible sign of a price reversal. Bullish and bearish hammer at the top of an uptrend, it called hanging man. Inverted hammer at the top of an uptrend is called a shooting star, and it is a strong possible sign of price reversal. Comparison of different types of candlestick relative to its wicks. Full type bearish and bullish Marabozo. In bullish Marabozo, it's a very strong candle. The buyers are totally control the market. In this candle, open and low and also close and high are at the same level. Bearish Marabozo is also a strong candle that the bear or sellers are totally control the market. In this candle, open and high and also close and low are at the same level. This is bullish and bearish open type Marabozo. In open type Marabozo, the high price and close price are at the same level. And in bearish Marabozo, the close price and low price are at the same level. In these two types, they are very strong like full type Marabozo. The only difference is you have a very small price rejection at the open place. This is they call bullish and bearish close type Marabozo. That's again very strong candle, and in this candle open price and high price are at the same level. For the bearish and for the bullish, open price and low price are at the same level. Now in these two candles we have a very small price rejection at the close price. Now these are three candles. These are three candles which are the symbol of indecision. The first one is they call 4 price doji. Open, close, high and low are at the same level. So the volatility in this candle is very low, and that is the symbol of indecision. When you see this candle, it means the buyers and sellers, they cannot decide whether they go up or down. Now this is they called long leg doji. In long leg doji, the upper and lower shadow are very long and are at the same level. Now the open and close price are at the same place. This candle is a symbol of indecision between buyers and sellers, and the only thing is the volatility is high in this candle. When you see this candle at in an uptrend, you see any time that you see in an uptrend, you see this sign, you can imagine that the trend is stalling and probably you are very close to reversal. This is long-legged pin bar. You see the price, it opens here and first the price go down because of the presence of sellers in the market. And again, it got rejected by the buyers and the price go up and past the open price and go up all the way here. And again, it gets rejected by the sellers and sellers push the price down and closes here. Since open and close they are almost at the same place, so this is they call indecision pin bar. The power of buyers and sellers are basically equal. This is hammer. That is hammer, and in this hammer we discussed it early. Usually the price open at this place and then the sellers push the price down and up to here, and then again it got rejected by the buyers and the buyers push the price up and up and up and up and closes here. So the buyers in this candle has lots of power. And this is a shooting star. Again, in shooting star, the price basically open here and it goes up all the way by the buyers, and again it gets rejected by the sellers. The seller push the price down and down and down, and finally it closes right here. So this price in this inverted hammer, the sellers has a huge price, a huge power. This is a dragonfly doji. It's basically the same thing as hammer. That is the buyers has tremendous amount of power in this, and this is they call gravestone doji, which is almost the same thing as a shooting star, which the sellers has a huge power in the market. How to combine two candles together? Let's assume this is a bearish candle with H1 time frame, 1 hour of trading, and we want to combine this candle with this bullish candle, which engulf the first one. And this one has also H1 time frame. Now, the rule to blend these two candles is like this. We take the open of the first candle, we take the close of the second candle, then we take the portion between open and close, which is that green square, and then we take the high and a low of the pattern, and the equivalent will be bullish hammer. So since the green candle, the bullish candle, engulf the bearish candle, this pattern is called bullish engulfing pattern. And since we blend two 1 hour candle, the outcome is going to be a 2 hour candle. So that is the reason bullish engulfing, if you see this bullish engulfing at the bottom of a downtrend, it suggests trend reversal, because the outcome of these two is nothing but a hammer. I told you just a little before that the outcome of all the pattern is nothing but hammer or inverted hammer, bearish or bullish. So this video is very important for the beginners. Candlestick pattern in two different time frame. This is the price trend Air Canada stock H4 time frame, Yahoo Finance, and this is Air Canada stock H1 time frame. both trends are identical in terms of the period is from the 20th of April to the end of April, and this one the same thing, from the 20th of April to the end of April. So you see the trend, it looked the same. The only thing is, on the right side, each candle is equivalent to 4 candles on the left side. So the H4 time frame, you don't see too much detail of the activities, whereas in H1 time frame you see lots of details. So that is the reason when you want to enter the trade, you have to go to a shorter time frame in order to find the right place to enter the market. Now in our future videos, we are going to continue from this section and go up. Probably is going to be an intermediate video and then finally advanced video. So please follow up and don't miss these videos.